Check adjustment number C. It says make provision for outstanding interest on the fixed deposit. This investment has been in existence for the entire year, so it was there for the whole year. Interest is not capitalized. It means it's not part of the fixed deposit amount. So we must check now our trial balance. If you check our trial balance, we are looking for fixed deposit. It says there fixed deposit in brackets 8% per annum and then 495. So if we calculate, we must calculate the interest. It's 495,000 multiplied by the 8%. Multiplied by 8%. So we get interest for the whole year is 39,600. So interest on fixed deposit 39,600. So we add that to the operating profit plus operating profit of 635,860. Then it will give us a 675,460. 675,460. That is our profit before interest expense. There is also a missing item there. We must write interest expense. Interest expense. There we go. We must also check if we have interest or expense refers to interest on loan. We must check if we have interest on loan from the trial balance. We don't have any figure there, as well as interest on overdraft. We have nothing there. And then we must check if we have any adjustment I. It says the loan statement received from Joy Bank on 30 June 2011 reflected the following. So we are looking for this figure. What is given to us there? They say balance at the beginning we had 1,125,000 as balance at the beginning of the financial year for loan, and then the repayment 458,000. They charged us interest. We don't know how much, but now we are owing 804,500. So what are we going to do? We'll use our calculator and calculate. We'll take the figure 1,125,000 minus 458. Remember, 458 refers to the repayment. So if you pay the loan will reduce by 458. But now we are left with 804. So you'll also subtract 804 because we are looking for the interest. So we'll have 137,500. Remember, it's 1,125,000 minus 458 and minus 804,500. Then we'll get our interest. We'll get our interest expense as 137,500. And interest expense, it must be in brackets. If we added the two, 675,000, 675,460 plus, sorry, we said we must subtract minus 137,500. It will give us 537,960. That is profit before tax. And then we'll check the adjustment if we have any adjustment on income tax. Check adjustment J, income tax for the year 105, 150, 285. So we'll subtract it, 150, 285 minus 150, 285 to get 387,675. That is our net profit after tax. So we are done with the November 2012 question paper. So I hope you followed and then you understand what was going on there. In few minutes that we have, we can also refer to another question paper, the November 2009 question paper. We only check information 4.1.2. Remember we said when you prepare the income statement, you don't check the balance sheet account section, you only check the nominal account section. And then we also said the ordinary share dividends will not be part of the income statement. So when you prepare the income statement, you are not going to write or to include, you are not going to include ordinary share dividends or dividends on ordinary shares as operating expenses, because it's part of the appropriation of the profit of the company. So it will be part of appropriation account or retained income note, not part of the income statement. So please don't forget about that. So we'll do that, and then what are we going to do? We said we'll also check the adjustment. We'll quickly check them. Adjustment A, prepaid expenses in respect of sundry accounts. It means if it's prepaid, it was paid in advance. At the year end, 3,200 have not been taken into account. It was supposed to be subtracted because it does not belong to this accounting period. It belongs to the following accounting period because it was prepaid. So it means when you record, you'll check your sundry expense from the trial balance, 39,250, then you'll have to subtract 3,200. That will be the calculation. And then if you check adjustment B, it says on 30 September 2009, 580 was received from EA Ethic, whose account had previously been written off. This is not a bad debt because the account had previously been written off as irrecoverable. It means it was written off or it was recorded as bad debts before. Now he's coming back and then now he's paying because you received for 580. So it will be the account called bad debts recovered as part of your incomes. If you check adjustment C, it says provision for bad debts must be adjusted to 1,830. In the previous activity, we had to calculate it using 5%. In this case, it's given to us. The provision for bad debts must be adjusted to 1,830. So it means we'll compare. Remember we said if it's adjusted to something, it's adjusted to 1,830, then we compare. So we'll compare it with the given figure. If you check there, it's 1,440. So we'll say whether it must be adjusted to that. It means it will increase. So we'll say 1,830 minus 1,440, and then it will reduce. It must increase from 1,440, 1,440 to 1,830. So we'll say 1,830 minus 1,440. So it will give us 380. 390 will be recorded as expense because it's supposed to increase from. Remember we said if it increases, it's part of your expenses. From 1,440, it must go to 1,830. Remember, because of time, we are not going to write everything. If you check adjustment E, it says rent has been received for 14 months, but we only need the rent for how many months to be recorded in the income statement? For 12 months. So 14 months means 2 months in advance. We said if it's 2 months in advance, it means income received in advance. And we said if it's income received in advance, we subtract. So we check our rent there. It's how much? 56,000. We'll say 56,000 from the trial balance. Let's check. We'll say 56,000 divided by 14 because it's for 14 months. So 56,000 divided by 14 will give us 4,000. But 4,000 refers to rent per month. Rent per month. But how many months were paid in advance? Because there were 14. it means 2 months in advance. So 4,000 multiplied by 2, it will give us 8,000. So we have income received in advance of 8,000. When you record, you will simply say open a bracket 56,000 minus 8,000 because it's income received in advance. So you'll record 48,000 as the final figure. So we also check, remember we said it becomes very easy to calculate. So you'll check your adjustment. We also have adjustment G, physical stock account. Remember we said we'll subtract that one. Adjustment H is more or less the same as the adjustment that we have done. The question mark there, we said you take the opening minus the payment minus the end, then you'll get that one. Remember also with calculation of depreciation, we are just summarizing. The calculation of depreciation, we said you must first check the method, you check the rate as well as the lifespan of that asset. Did we have it for the whole year or not? So you must also check that. Now with income statement, there are a lot of things that you must check. The adjustment K, income tax for the year. So remember we said when you are given the answer sheet, you must check what needs to be done, what is given to you, and then we said if you check like this, remember you'll use the brackets there. Where necessary, you'll check if there is a missing account there. These ones maybe they have been covered in the trial balance. Then you'll be having others that are not part of the trial balance but part of the adjustments, like trading stock surplus. You can also have provision for bad debts adjustment there, and profit on sale of asset. And then if you check the operating expenses, some of them they are given to us, but there is also a space there. You can also check for trading stock deficit. We check for provision for bad debts adjustment. Remember, provision for bad debts adjustment can either be income or expense. We can also check if the asset was sold. If we have any transaction or adjustment whereby the asset was sold, we must calculate whether it's a profit or is a loss on sale of asset. If it's profit, it will be part of your operating income. If it's a loss, it will be part of your operating expenses. So it will come there. So possibly we'll have trading stocks deficit there, we'll have provision for bad debts adjustment, we'll have loss on sale of asset, and we can also have depreciation as the expenses that are not covered in the trial balance but can be part of the adjustment. So there are some things that you must also consider when you calculate. Now in summary, when you prepare the income statement, remember we agreed, we said number one, we also referred to the information that you must know how to count months. Remember we talked about that. Remember at the beginning we talked about this, how to identify accounting period, how to count months, as well as how to use brackets in your calculation. So we also said number one, you must also check the format of the income statement. You must know it plus the notes. We have about 9 notes of the financial statement, so we must also check the notes and know that by heart. And then there are a few things that you must also check when you prepare the income statement. There are 2 ways of forfeiting marks. Number one, you can easily forfeit marks when you prepare the income statement. You can forfeit marks, number one, by misplacing of items. If you misplace the items, like for example, if we are having income statement there, you can misplace the item. You can write provision for bad debts adjustment. That time when you calculate it's an income, but we have recorded it as expense. Then you can easily lose marks because we have misplaced it. If you also misplace, we said under interest income, we have interest on fixed deposit. If you don't record interest on the fixed deposit as part of interest income and you write it there as part of your operating income, you'll also forfeit marks. If you write interest on loan as part of your operating expenses and not interest expense, you can also forfeit marks. That is misplacing. And then you can also forfeit marks by using the foreign items. Remember we said when you prepare the income statement, you must only check the nominal account section. So if it happens that you record accounts that falls under balance sheet accounts, like maybe equipment, you write bank, you write, remember with provision for bad debts, we have provision for bad debts, that is an asset, it's part of the balance sheet. But under operating expenses or operating incomes, we can have provision for bad debts, adjustment. So don't forget to write adjustment when you prepare that. Otherwise, when you write provision for bad debts, it's like it's a foreign item because it's not part of the income statement. It's an expense. Trading stock instead of trading stock deficit, and so on. If you can write any item that belongs to the balance sheet under the income statement, that will be using the foreign item. So you can easily lose marks because of that. So I hope you understood everything what we have done so far, and then that will be the end of our lesson. Good luck. Thank you very much. Bye.